Okay, so this video is going to be about volume profile. Now, volume profile has kind of picked up popularity um, in the past little bit, a lot of on social media. Um, there's a few notable ICT influencers that have switched to volume profile, uh, and really just auction market theory in general. Uh, to not get into full details, auction market theory essentially states that the market acts like an auction. Um, for every buyer, there's a seller, which is true, and essentially it's just participating in that, excuse me, in that auction, and um, it that's what makes price move up and down. Okay, so to kind of give an idea of just a very quick breakdown of volume profile for those who don't really know, uh, it is a bell curve, a histogram on a bell curve, um, where it's showing the distribution of volume. Okay, so when you look at this one, it's showing that this is starting of the trading session at 9:30. This is the current session. You can see that the majority of the volume is traded at the point of control, which is right here, which is the majority of the volume. And you can see where all the volume spikes are. Low volume here. So you can see just in this area in general, in this trading area, there was low volume traded. Okay, but in this area, there was high volume traded. Low volume traded, uh, higher volume, higher volume, etc. So, and then you have the value area low, value area high. This is kind of the value area, and this is outside of value and outside of value at the top. Okay, so the area within the value areas, this is where 70% of all trading happened. Okay, so when you look at a volume, if price is outside of the volume area, it's outside of the norm. Okay, so if this is where 70% of all trading happened, if you're outside of here, you're in the 30% range of where trading happened. Okay, so you're outside of the norm. Okay, it doesn't mean anything specific. It could just be prices trying to discover new value, um, or it's just testing and grab liquidity. Either way, it's just a indication of something to look out for. Okay. Again, this is not a strategy, it is a tool. Okay. And again, this is not financial advice in any way, shape, or form. Use this, do your own research and use it how you feel. But I just want to give you some of the tips and tricks that you can look for. Okay. Um, so one thing I'll note is that if you trade using TradingView, you have to be very careful with the volume profile because TradingView doesn't go off of tick data. Uh, you can see the levels will get kind of shifted. So ideally, a value profile or volume profile should have the same buyer area high, low, and point of control at every time frame. Okay, if it's based off tick data. So if I take the buyer area high there, buyer area low, point of control, okay, and I go down from 30 to a 5, you can see it drastically shifts. Okay, 2 minute, okay, it shifts. So when you see that, you have to be very careful. Okay, so what I have found is the 1 minute and 2 minute chart uh, tend to be the most accurate to tick data. Uh, and if you plot out the 2 minute, you can kind of work your way up and see like the 5 minutes pretty accurate with it. Um, 15 minutes pretty good, but then the 30-minute offsets. So if you're look at the lower time frames, you can kind of keep the profiles all the same, but just keep them in the back of your mind. Okay, it's like when people use the footprint on TradingView. It's not accurate at all because there's no tick data. Can't really base it off of a footprint is tick data, but if TradingView doesn't offer tick data, it's pretty useless. Okay. However, it still gives you a very good breakdown. And you also need to keep in mind that a lot of people use it. And it's again a self-fulfilling prophecy of why things happen. Okay. So there's two kind of trains of thought when it comes to volume profile. Some people like to use it on the full Globex session. So I have, the aftermarket, pre-market session, and then the cash session. Okay. Some people only like to do it on the cash session and just follow the cash session because that's where the most trading happens. That's where most players are, and you can base it off of that. So if we're going to auction market theory, essentially the theory is if price opens, okay, outside of yesterday's value or the prior day's value, it is likely to stay outside of that value. Okay, it might retest it, but it's likely to stay out. Like if price opens within yesterday's value, it's a good example, but price opens within yesterday's value, okay, it's likely to stay in yesterday's value, which it did. It eventually broke out, but it stayed within that range. Okay, same idea here. Price opened within yesterday's value and it stayed within yesterday's value. Okay, so it just gives you that idea of um, this where the market can go. It is not 100%. It's just a theory and it raises your probabilities. Okay, so you just have to keep that in mind. So the other thing that people use it for, and what I like to use it for, because it really does work, is just key levels. Especially when it comes to overnight key levels, you can see that the overnight like very high, very low is generally respected when you look at the uh, cash sessions. So if I turn off the cash sessions, let's keep the overnight levels. Okay. You can see like very high and very low from the overnight. You know, you can just even go down. Like it is respected. Okay. So they're just areas to reference. Okay. Try another area. And I won't do the very low because the price didn't hit it. But you look at the very high. Okay. And you can see price is respecting those areas. Okay. So it just gives you an idea of like, okay, well, say you have a uh, just randomly, not saying there is one here, but just say you have a supply zone right there. Just for whatever reason, you have a supply zone right there. Okay. You might see price, like say you have your supply candle there. Okay. There's your supply candle, here's your supply zone. Okay. So you might be waiting for price to come back down to tap it so you can get up. But the problem is that you might not notice that the overnight value very high is right there. So what might happen is instead of it tapping here, it might go down and tap here to go up. Okay. It's just another area of confluence that you can look at. Okay. Another thing that a lot of people do, and I like to do as well, is when you combine confluences. Okay. So I don't know if there's any good examples. Uh, let's see. Okay. So if you look at right here, okay. So you have an overnight, you have the point of control overnight, you have an overnight high. Okay. That also was the next day's overnight or point, the next day's value area high. Okay. So that's like you have an overnight value with the overnight point of control and the next day's value area high. Okay. So when price comes up here and it taps into that level like this, like there's a good chance they're going to get a strong reaction to that. And it did. And it even created the next value area. And you can see that that zone remained in play. Um, so little things like that. Um, you can even tell just from, this value area low turned into the point of control from the next day, and then it turns into point of control and value area high of the next overnight session. And you can see like that whole area was reacted to. Okay. So the levels matter. It's just a matter of reading them in a way that can help you in your trading. Okay. A lot of people try to trade just off of the levels. Like, for example, because right now we're in the current range, um, some people might be like, okay, cool. I'm just going to put a limit order right there, target right there. Okay, because we're in this range. I know 70% of the trading's happening here. There's a good chance that 70% of the trading happens here. We'll hit this, we'll go back up. Okay, there's nothing wrong with that. Some people do it, and um, again, there's nothing wrong. Like, I'll even just do this. I'll see if I can do it in time. Yeah, I'll see. I'll see if it hits. So set a limit order right on there, and I'll just see if it plays out. Okay. So when you also look at the profiles, you also need to remember that the point of control, because it's where the most of the profit or most of the trading happen, it's a good magnet. If you look at where majority of the market wants to trade, they need a lot of orders. So they want to refill their orders at the area where the most amount of orders happened. That just makes sense. So point of control is a good area. Uh, High value nodes. I mean, that's not really a high value node, but high value nodes or volume nodes are good areas. Um, yeah, I mean, like, look at this, just randomly, even when you had the giant downswing. And nothing saying it's going to work, but if you want to take a quick scalp back up, like, you got a good bounce. And that was a market that was dropping. Okay. And you can see the value is deciding to shift based off of that trading. Okay. But you can see, like, look at it. If I would have taken more size, like it'd be a lot bigger number, but that was no thinking. It was just we were in the range. So I just took a trade at what the value area was at the time. And look at it. Now, if I did take the trade, I would probably put it right there. Or if I was in multiple contracts, I'd take out the majority of them there. And I would target the new value area or the value area high. Um, but again, like that's just a random trade. And it's again that coin flip effect. And it's just a matter of increasing those odds. Um, so that's pretty much it when it comes to volume profile. There's other like details you can look at if you want to get into the nitty gritty. Um, so when you have a profile that looks like a D, so it's a D shape, okay, this is a balanced market. The volume is nicely balanced across the day. Okay, that just means the market's in balance. Auction market theory said there's only two states of the market. It's either in balance or it's hunting for balance. Okay, that's why you can see when you look at markets like this. Okay, balanced, hunting for balance, balanced, hunting for balance, balanced, hunting for balance, balance. Okay, when you actually look at a market that way, um, that's kind of where the auction market theory kind of comes into play. Okay. Um, but again, when you're looking at uh, the way the shapes are, so you can have a balanced day. Okay. You could have a P-shaped day. So it'll probably look like something like this. Okay. So if the market opens down here and it makes a P shape, that means price is looking for or new price discovery to the upside, bullish. Okay. Problem is if price starts up here, it ends down here, that means price was here and is looking for new price down here. It just hasn't found it yet. Okay. So it's bearish, but it hasn't found the new price yet. There's a lot of things that I've seen on other channels where it's like, oh, P shape means, price is bullish because it skyrocketed up, it found acceptance there. Problem is that if the market opened here, okay, and all of a sudden it dropped, you're going to get that same P shape when you actually look at it. Problem is the market opens here versus here. Okay. So that's what we have to watch out for. The other one is the B shape. So it's kind of same concept where it kind of looks like you have a lot of volume down here, and then the volume kind of tapers off. So again, it looks like a B. Same concept is that if price starts here and then ends up here, that means that price is looking for new value. If price starts here and ends here, that means price is looking for new value and found the new value. Okay. The next one you have is a W distribution, or like the capital B. This looks more like that. So this is kind of what I like to think of as a complete price discovery. Okay, so price is here. It's like, oh yeah, like everyone's happy with price here, but now it wants to discover a new price. So price is discovering and it finds a new price that it likes. That's where you get the double distribution. Okay. This area right here is a very strong support or resistance depending on which way it goes. Okay. So that's pretty much volume profile in a nutshell. I mean, again, you can just see we just let this trade go and it's, you know, if we want to make some profit, we would have made profit. Okay. Obviously, not the best take profit, like where I would set risk reward's already there, but if you just leave it, if it stops out, it stops out. But it just goes to show you that you can take those trades. Because that's essentially what is this value. You're trading within value. Okay. So just use this as a tool to add to your trading. Doesn't need to be your main tool. It's just a context. It tells you the context of the market. If you're looking at price, so let's close this off because so if I'm looking at price, okay, and I'm like, oh, look at this, okay. If I'm a supply and demand trader, okay, and I see, okay, perfect. Look at this. I have a beautiful supply zone right there. Okay. Now, if I wasn't a volume profile trader, I'm like, beautiful supply zone. Awesome. Look at that. Okay. Low volume node, variable supply. I can assume it's low volume, it's fair value gap. If I add in the volume profile, not only is it a supply zone, but it's also right at the low volume node. The low volume node was, or the value area low. The value area low was up here, but right at the value area low. So now you have a beautiful confluence on taking this trade because you have your actual strategy if you trade supply and demand. Plus, you have a great extra area of support. So not only does it have to break your supply, it has to break the value area low. And if I would put a stop, I would probably put a stop uh, right at the high value node or high volume node. Okay. So again, use it as a tool. That's what it's there for. And it's a very, very, very used tool across the institutions. Okay. Volume is everything. Okay. If you guys have any questions about what other things you can use volume profile for, if there's other things you want to see with regards to volume profile or just anything in general, shoot me a comment and I'll do what I can. Um, but I hope this has been educational for you because it's a very powerful tool and it's something that I feel like a lot of people can use to increase the odds in their trades. Okay. So again, thank you for taking the time. And if you enjoy my content, I would really appreciate subscribe. All right. Till next time.